Suppose receipts and payments count of an organization is given and it is for the year ended 31st December 2010. On debit side, to balance BD 5,000, to subscription 6,000, and the total is 11,000 rupees. And on credit side, by wages 4,000, by balance CD 7,000 rupees, total 11,000 rupees. And have a look at the additional information. Outstanding subscription as on 31st December 2010, 1,000 rupees. And prepaid wages 600 rupees. And furniture as on 1st January 2010, 5,000 rupees. Prepare income and expenditure account and balance sheet as on 31st December 2010. As I have already strongly suggested, you should try to solve this question on double sheet. So prepare the format of income and expenditure account and the balance sheet. And you should prepare two balance sheets. Balance sheet at the end and balance sheet in the beginning. Although the question has not asked for the opening balance sheet, but you are supposed to prepare it to make the question convenient. So first of all, read the additional information. Outstanding subscription as on 31st December 2010, 1,000 rupees. Subscription is income for us. This is the contribution by the members to the organization. Outstanding means our cash book is showing that we have already received 6,000 rupees during this year. But outstanding is 1,000 rupees. What it means? We were supposed to get 7,000 rupees, but some members couldn't pay during the year. That is 1,000. Sometimes it is called subscription in arrear at the end. So that's the same thing. First of all, we have to treat this outstanding subscription. Outstanding expenses are the liabilities. So naturally this is outstanding income, or we can call it income in the arrear. It is asset, so it will be taken to the asset side. In the balance sheet, on asset side we'll write down subscription in arrear or outstanding subscription. At the end it was 1,000 rupees. Outstanding income or outstanding expenses, they are always added in the income statement. On credit side, we'll write down by subscription, whatever it is, plus outstanding 1,000 rupees in the inner column. Now we'll go to the next information, that is prepaid wages 600 rupees. Wages is an expenditure for us and prepaid wages is always treated as an asset. So it will be taken to the balance sheet on asset side, prepaid wages. This thing you have already learnt in the final accounts. So at the end it will be 600 rupees. And prepaid wages is always deducted in the income and statement from wages. So 2 wages minus prepaid 600 rupees in the inner column. Now go to the next information, that is furniture as on 1st January 2010 was 5,000 rupees. So we'll take the furniture to the asset side of the balance sheet. Furniture in the beginning it was 5,000 rupees. So we have covered all the additional information. Now we'll move to the receipts and payments count. To balance BD 5,000 rupees. Naturally this is the opening balance of cash. So on asset side we'll write down cash 5,000 in the beginning. Now to subscription 6,000 rupees. 6,000 rupees will be taken to the credit side of income and expenditure account because it is income. So we'll write down 6,000. But there is addition of rupees 1,000 to the subscription. So in the outer column we'll write down 7,000 rupees. Now move to the credit side of receipts and payments account. By wages 4,000. Wages is an expenditure for the organization. It will be taken to the debit side of income and expenditure account. To wages 4,000. And we have to deduct 600 as prepaid. So we'll write down 3,400 in the outer column. Now receipts and payments account, the next item. By balance CD 7,000 means closing balance of cash is 7,000 rupees. It will be taken to the balance sheet. So cash balance in the beginning it was 5,000. Now it is at the end it is 7,000 rupees. That's all. Now prepare the income and expenditure account. On credit side, the total is 7,000 rupees, and on debit side it is only 3,400. So the gap is 3,600. That will be called to surplus, not net profit. 3,600 rupees. So total is 7,000 rupees. So this club has earned 3,600 as income. Now we'll make the total of balance sheets. In the beginning, the total was 10,000, and on liability side there is nothing. Naturally, it should be the capital. So we'll write down capital. This is the balancing figure, 10,000. The total is 10,000 rupees. So we have got the opening capital. Now we will prepare capital account. On credit side, buy balance BD, and on debit side, to balance CD, and on credit side, buy surplus. So BD is 10,000 rupees. You can see in the balance sheet, opening balance sheet, and buy surplus 3,600. This figure has been taken from income and expenditure account. So the total is 13,600 rupees. So to balance CD will be 13,600 rupees. And this closing balance of the capital will be taken to the closing balance sheet. That is 13,600. So now the total of the both sides is 13,600. If the totals agree, it means question is all right. Before I move ahead, I would like to remind you something about the final accounts. You know, we used to make profit and loss account, and on debit side we used to write down two expenses, that may be wages, salary, advertisement, anything, and we used to add outstanding expenses in the inner column. If there were any prepaid expenses, we used to deduct it in the inner column. And in balance sheet, outstanding expenses were shown on the liability side and prepaid expenses were shown on the asset side. And so far this income is concerned, you know, income is always placed on credit side of profit and loss account. By income it could be interest or anything, commission. And outstanding income we used to add in the inner column, and prepaid incomes we used to deduct in the inner column. And the same thing was shown in the balance sheet. I mean to say prepaid income on the liability side and outstanding income on the asset side. And the same thing we are doing in our non-trading institute accounts. But you must remember, all these adjustments were at the end. Means suppose you are preparing final accounts on 31st December 2010. All adjustments belong to 31st December 2010. I mean to say at the end. But now we'll start the adjustments in the beginning. It will have totally opposite effect of all these adjustments.